The focus is on Ambuja Cements, and Ambuja Cements delivered its results on Friday evening. When you're talking about how Ambuja Cements has performed, it's a very similar performance to how its peer ACC. Now remember, both ACC as well as Ambuja actually share the same parent company, and that is Lafarge Holcim Group. Now what has actually happened is that ACC as well as Ambuja earlier had entered into a master supply agreement. This is a program in which both ACC and Ambuja identified certain techniques, certain cost saving measures, so that both of them could go ahead and increase operational efficiencies. Now what has actually surprised analysts is that the cost saving, the operational efficiencies is something that has positively surprised and has gone ahead and kicked in much faster than what the street was anticipating. When you're talking about the core operational performance of Ambuja Cements, you're talking about revenues coming in line with what the street was anticipating, and it's quite a muted set of numbers as far as the revenue or the top line, as you call it, is concerned, given the fact that when you're talking about the volumes have gone down very significantly on a year-on-year basis. In fact, the volumes are in the high 20s, and this is the kind of volume decline that Ambuja Cement. Remember, this is a very major cement company, and this is something that has kept the street quite muted and has kept the street still very cautious as far as demand is concerned from the entire real estate as well as the construction pack is concerned. The other thing that has come in, now this is a negative or a slight disappointment, but in line with what the street was anticipating. Now when they're coming into the core EBITDA, or the earnings before income tax, depreciation and amortization, what has actually happened over here is that you're talking about cost savings kicking in, you're talking about freight costs being very low, you're also talking about input costs in terms of petcoke being very low, and this is something that has helped the company beat the street as well as analyst estimates when you're talking about the EBITDA as well as the EBITDA margins. Profitability too, on the back of the above measures, has come in above what the street was anticipating. Now, much along expected lines, most of the brokerages are quite enthused by the results of Ambuja Cements. In fact, what they are saying is that given the fact that ACC as well as Ambuja trade at a slight discount when you're comparing it to large cap peers such as Ultratech and Shree Cement, they believe that there is still quite a bit of space as far as valuation is concerned. They believe that there could be a certain amount of a run-up as far as ACC and Ambuja is concerned, and you could see a valuation catch-up playing in as far as both of these companies are concerned, especially Ambuja Cement. Now what Citi is saying is that they've gone ahead and maintained their buy stance. They've upgraded their target price from 235 rupees a share to 255 rupees a share, and also what they are saying is that the master supply agreement with ACC is something that has kicked in much faster than what they were anticipating. Motilal Oswal too has a buy rating, and what they are saying is that you have gone ahead and increased both EBITDA as well as PAT estimates by 17 to 20% respectively, and they are basically still quite cautious on the back of the fact that construction activity at this point of time is yet to see any kind of a meaningful uptick.